Hey guys, what's up? Welcome to another episode with me, Shashank Godappa. And in today's video, we are going to look at what did PPFAS do last month. They actually did a couple of things. They even came out with a note explaining their rationale. So I'm going to talk a little bit about that as well. And we'll also look at what companies they actually added in the last few months and how much is their cash portion as well. And we will deep dive into 3 companies today that they recently bought. Okay, so let's quickly dive in. Now, let me first open the Excel sheet and show you what they have done this month. So basically, they have 14.5% in cash even today. So they have not done any drastic changes in their entire portfolio. It was a very boring month for them. They increased their holdings a little bit in Bajaj Holdings, Maharashtra Scooters, which is basically an increase into a holding company structure, which gives them a lot of dividends going forward, right? They've added more gas. So Mahanagar Gas, Petronet LNG, Indraprastha Gas is something that they've increased again. HCL Technologies again an increase. Maruti Suzuki increase. And this was a very interesting company that they added quite a bit of amount, which was CIE Automotive. And I'll deep dive into this company. They also added a good quantity of Dr. Reddy's. You can see the delta change here. A good quantity of Dr. Reddy's. And EID Parry also a good increase has happened. So let's understand a little bit of it. So 85% is invested. Around 15% is still in cash. And they are very heavyweight on bank and finance, fuel and power gas, overseas, and IT software. So it is still not very what do you call that, aggressive, and this is something I think they spoke about it. So as you can see, these are all the different things that they have added this year, and these are all the research that is there. But let me just go through these 3 companies in more detail. Right now, if you also see PPFAS last month, they basically came and said that they usually like playing a longer term game and they are not someone who plays a short term game. And I would say in all honesty, it is fair. Yes, they are underperforming right now, but I think it is too harsh to judge any mutual fund in a 1 month or a 1 year time frame. Even a 2-3 year time frame, I think it's very harsh, because we need to look at it from more of a 10-year time frame, because mutual funds are not stocks, right? There's something that you have to stay invested for a long period of time, do an SIP, and hope that you can beat the index by a few bips here and there. So again, let's look at this company now. What have they done? The 3 companies they've added. The first company that they've added is a company called CIE Automotive, which is basically a Mahindra company, which is again, they do a lot of castings, forgings, and they supply gear, stamping, aluminum, everything to the European economy, right? And if you look at Europe has not been doing well in the entire two-wheeler space, but now with the Euro 7 commission kicking in, and they have put a lot of ban on BYD, on Chinese imports, so mostly they might just come back as well. The business has 2 engines. One is high return India operation and a European arm that they're doing a lot of restructuring with it as well, right? And this time we saw both those engines basically firing, and I'll show you how that has worked. Their consolidated sales went up by 11% this year, and they had a 17% jump in EBITDA, which means some kind of operating leverage is kicking in, and profit has gone up 15%. So if you see that the sales went up 10% but profit went up 15%, usually means that the operation is becoming more and more efficient, and that's called operating leverage, right? And if you see here, the India margin went down by 0.8%, but the European margin went up by 3.4%, which has actually given a lot of advantage to this. Now if you go to their recent conference call, the earnings call as well, so they had mentioned that Europe clearly carried this quarter, and European EBITDA rose 36% and the margin jumped to 15%. Now even though Euro term sales fell 3% in the weak market, they're doing structuring and restructuring. Basically they're getting some operating leverage out. So obviously if you look at Parag Parikh's playbook, they don't play for a 1 quarter or 2 quarter, they play for a longer time frame, right? So it seems like maybe there is a turnaround happening. Again, I don't know, we can't take that call yet, but if there is some operating leverage playing out, then it can maybe start a new journey, but it is good to keep it under our radar, right? India grew but gave up margin mainly because of the inflation and aluminum vertical cleanup that also came. So aluminum is also becoming so expensive. Exports stayed soft, and they had a lot of customers such as Hyundai. So Hyundai did not take a lot of exports from them or imports from them. That is something that we need to look at. Net cash is at 1,400 crores and it is giving a 19.4% return on net assets, right? And if you look at their order book, they have 500 crores of order book, again in the gear, stamping, and the iron foundry. And they are trying to diversify now. They have good diversification into 4-wheeler aluminum, iron castings, EV gears, composites, and all the other places as well, right? If you go quickly to their fundamentals, they are currently sitting at 15,000 crore market cap. So it is a small cap company sitting at 17 P ratio. As you can see, PPFAS usually buys such companies that are very cheap, and then they play a 5-year, 10-year kind of a game. Last 10-year CAGR has not been attractive. Last 1 year has not been attractive. Last 5 years has not been attractive. And if you look at market cap to sales, also very cheap. So the clear game here is it has to play on a long-term basis, and it has to do like a turnaround kind of a system, because the P is obviously very cheap. So if the turnaround is happening on the European front, that is something that I think all analysts will be looking at, right? As you can see, the growth rates are not very attractive over here. And if you look at the balance sheet is insane, right? They have very, very strong reserves. Net borrowings are very low. The assets are quite strong. In fact, if you just look at the reserves and assets, they are actually quite strong on the balance sheet side. If you look at the balance sheet, it's 11,000 crores, almost 10,000 crores. And if you look at the market cap, it's 15,000 crores. So obviously the price to book will be very attractive, and the holding is no change in the holding of the promoters. So that is something. But one interesting thing is that the public shareholding has gone down over a period of time. The public shareholding has gone down, and the DIIs have increased a very high percentage in this company. A lot of DIIs, in fact, HDFC FlexiCap is also here, Parag Parikh is here, ICICI Opportunities Fund is here. So many companies are sitting in this. So it's very interesting to see what might play out. Look, our job here is to just learn as much as possible and just keep all of this in a watch list to make sense of some nonsense, right? So as I said, Europe can be the turnaround play that it's looking for, and that is something I think is the main thing that we basically look for, right? In the last 30 days, the stock went up mainly because of Europe's surprise margin and the balance sheet recovery that is also coming in. That is basically doing well here, right? Next company is basically Dr. Reddy's, which is a very big company, large cap company. And Dr. Reddy's is having a bad time in the market, mainly because one of their biggest high margin drug called Revlimid is basically now going off, and even Natco Pharma has the same drug called Revlimid that is also going up, and now they are coming into the GLP-1 race as well, which is the semaglutide space. So they are coming there, and this is something which is very interesting to look at. Can they win that? But if you really ask me, there is so much competition in this semaglutide space. It is very difficult to see who will win and who will basically lose, right? So if you look at the revenue, it actually fell mainly because their blockbuster drug is going away and a new drug has to come and replace it. So overall, everything was quite bad. It was not great. As you can see, the Revlimid did the major damage. One off semaglutide charge, which they provisioned for API inventory of 240 crores. So that is what is hitting them right now. Base business is okay, but their main drug is basically not doing well. And they're saying that semaglutide might help them in the next quarter, in the H2 part of the business. And that is something that they're looking at right now. If we go to the fundamentals of the company, it is currently at 96 crore market cap, 30 P ratio. Usually in pharma, we don't look at P ratio, we look at price to sales, and it is sitting at 2.9 price to sales. That means it's very cheap. But this also has not been a compounder over a period of 5 years, 10 years, and 1 year. It has not been a compounder. And we can see it here that it is definitely on a longer term basis compounding, but the compounding rate is very slow. It's going at 6%, and even the dividend yield is not there. So it's a very slow compounder on that front. It basically needs some kind of a growth engine. And obviously, if you see the growth, right now it is going in the negative territory only because of their, problem with their main drug, right? So that is what is happening. Now, the third company that Parag Parikh invested was a company called EID Parry. Now, if you look at EID Parry, it is a Murugappa group company with two very different halves. Okay, so one, they are basically one of the oldest sugar makers in the economy, and now with all this ethanol and nutraceuticals, they are obviously taking a good chunk there. The bigger half is their 54% stake in Coromandel, which is again a leading fertilizer and crop company. Now, please understand, both Coromandel and sugar companies are very cyclical plays. They're good in some quarters, very bad in some quarters. So you have to be very careful on that front, right? So if you look at the revenue went up quite aggressively to 22%, but their PAT basically fell down. And Coromandel also revenue went up. Crop protection revenue went up quite a bit. Sugar segment fell down, and nutraceuticals again fell down. Now, Coromandel basically is something that is apparently going very aggressive, and that is where the play is coming in. If you look at EID Parry, it is 21 PE right now at a 14,000 crore market cap, barely any market cap to sales. So it is absolutely 0.37, and it has fallen very aggressively in the last 1 year. And if you look at the sales of this quarter, as you can see, the sales have gone up by almost 15%, and the loss was not because of anything else but a one-time other income adjustment that came in, right? That was last quarter's result. This quarter's result we need to know, but they have started adding this company. And as you said, that the majority of this company's holding is in Coromandel, so that is again a very interesting thing to look at, which is Coromandel. So this is something that we need to figure out. Is there a growth coming from this company? This is again a 33p, right? 61,000 crore market cap company, better ratios. As you can see, they are in the nutrient fertilizer business, nutraceuticals, and apparently this is growing, but the stock price has not gone up, as you can see here. Anyway, most of you guys keep saying, Shashank, show me companies that have not gone up already and all. So this is a company that's not gone up, but nothing is a buy and sell from my side, right? If you look at the sales are actually quite good over the period of long time. Very good sales over here. The margin has definitely declined, so that is something we need to see. It's gone from 11 to 9%. But But again, I think this is a very strong balance sheet company. It's not a very interesting company. It is a boring company only. But it is something that is basically here, right? So ethanol is the sugar side growth story. But ethanol, I would say, is very iffy in today's market. And Coromandel is basically fueling the parent because the Coromandel dividends, everything will come to this company, right? So again, these are the three companies. I won't go too deep into it because I think you guys get the gist of it. So these are the three different companies that they have invested. But again, I would say that it's not very aggressive. It could be more aggressive, but it's not very aggressive. But don't worry, my job is to just review and understand and learn. Similar to this, we have the Bandhan small cap review as well. We will do that also. If you have not watched it, please go watch the Bandhan small cap review video as well, right? But again, I hope you guys enjoyed this video and liked this video. If you did, please click on the subscribe button because we try and give you as much knowledge as possible. The goal of this channel is not to give stock recommendations. I'm sorry if you're here. That's not the thing we do. Our job is to teach and make you learn and make you fish, right? So that's what we do. I hope you guys enjoyed this video and liked this video. And if you did, please click on the like button and also subscribe. This is me, Shashank Odapa, signing off. Take care. See you. Bye bye.